Those have been difficult few months for the US dollar index. After rising beyond 100 points in March at the height of coronavirus woes, it has since crashed to trade at the lowest levels since May 2018. The bears say that the upcoming US elections are negative for the dollar's midterm prospects. Many are viewing a potential Joe Biden presidency as a threat to a range of policies that have been favorable to Wall Street. Add this to the US government's poor coronavirus response, a number of weaknesses that the crisis has highlighted in the US economy, and the unprecedented monetary intervention by the Fed, and you can see the bear case continuing to grow even stronger. The US dollar index, measured against a basket of 6 major currencies, edged up by 0.4% on Friday to close at 93.25, posting a slight 0.16% weekly gain. On the technical side of things, the end of July saw the DXY breaking below an important ascending support line that has held firm for 9 years. It held firm when the index previously bottomed out in 2011, 2014 and 2018. The loss of this long-term support level is a highly ominous sign for technical traders. Meanwhile, from the bulls' perspective, the enormous number of recently reported US dollar shorts can be not taken as a bearish sign. Alternatively, this could be an indication that the dollar is in fact reaching the bottom. If 2011 is anything to go by, the flurry of shorts seen that year was followed by the DXY bottoming out and then surging. For some investors, this is a sign that a reversal is imminent. Meantime, the euro weakened by 0.5% against the dollar on Friday to finish at 1.1795. For the week, it lost 0.3%. The euro reversed earlier gains as weaker PMI data pointed to a stuttering economic recovery. Meanwhile, cables sank by 0.9% on Friday to end at 1.3087. Still, it posted a weak 0.02% rise, clinging onto gains made during the prior week. Friday's weakness came after a downbeat update from Brexit negotiators that took the earlier strong wind out of sterling, with differences between the two sides leaving the talks deadlocked again. Elsewhere, in the crypto market, BTC fell by 2.2% for the week, closing at $11,663 on Sunday. Bitcoin suffered a price drop of $1,458 in under an hour on Sunday. The sudden slide caught many traders off guard, forcing out a significant amount of buying pressure from the market. Meanwhile, in commodities, oil prices settled lower after data showed that rigs actively drilling for oil in the US stood at 183 last week, versus the previous week's all-time low of 172. Brent crude plunged by 1.22% on Friday to settle at 44.35. For the week, it lost 1%. In the same way, WTI crude oil futures went down by 0.56% during the Friday session, closing at the 42.34 level. For the week, it lost 0.79%. What goes up must come down, Newton famously said. You can hear gold bulls adding what came down will also go back up. In one of the most jaw-dropping swings in gold, the price of the yellow metal gyrated by $107 an ounce between the high of Tuesday and low of Friday. December gold futures settled at $1,947 on Friday versus the previous session's close of $1,946.50. While December gold moved up by 0.03% on the day, it still fell by 0.14% on the week. According to analysts, the door isn't closed for a return to $2,000 mark. One reason for this, they say, is the Fed's annual Jackson Hole Symposium that could energize gold bulls and dollar bears back into action. You've watched Combined Financial Review on Insta TV with me, Anna Kasatkina. Subscribe to our YouTube channel to keep track of the latest events on financial markets, and see you back soon.